Cheetah Global inked an MOU with China government-linked Shanghai SUS Environment Co. for joint collaboration and development of waste-to-energy or WTE projects in Malaysia. This development confirms a report by The Edge Weekly about Cheetah Global signing a new deal for a WTE venture. The signing ceremony was held during the 20th China-ASEAN Expo and China-ASEAN Business and Investment Summit in Nanning and was witnessed by leaderships of both parties and countries. The Chinese enterprise committed 15 billion ringgit to the plan, which is to divert all waste from unsustainable landfills to WTE plants and holistically resolve Malaysia's waste disposal woes. Cheetah Global is assuming a leading role in the project's development of the proposed WTE projects in Malaysia, while the China firm will be responsible for financing, building and operating these plants. Cheetah Global's shares last traded 0.7% higher at RM1.45, giving it a market capitalization of 605.51 million ringgit. Prime Minister Datuk Sri Anwar Ibrahim is expected to answer questions in the Dewan Rakyat tomorrow about the court decision on a discharge not amounting to acquittal for his deputy, Datuk Sri Dr. Ahmad Zahid Hamidi. The UMNO president was given a discharge by the Kuala Lumpur High Court last month from 47 charges of criminal breach of trust, money laundering and graft involving millions of ringgit from the Yayasan Akal Budi Fund. De facto Law Minister Datuk Sri Azalina Othman Said said Anwar will take questions and likely reply at 2:30 p.m. tomorrow. Meanwhile, at the Palace of Justice, there is no decision yet on the letter of representation sent in February by Ahmad Zahid over the prosecution's appeal against his acquittal in the foreign visa system case. Court of Appeal Deputy Registrar Muhammad Khairi Harun fixed November 17th for further case management for the court to update the status. Shareholders seeking to take control of K&M Group deny that they are attempting to acquire Bozic and FBM Group for cheap, as alleged by its CEO and MD Ravindra Singham Balasingham. Flavio Porro, a former executive director of K&M, said in a statement that the plan is to introduce a 5-year strategy to address both the company's growth and debt repayment. This, he said, is in stark contrast to the current management's short-sighted focus on asset stripping. Porro may rejoin the group's board as part of the new board of directors proposed by the shareholders led by German businessman Andreas Hischen. He said the proposed board intends to establish a regularization plan which aims to align the group's restructuring scheme with its long-term strategic goals to enable the company to leverage its competitive advantages to eventually become a leading player in the industry again. Shares in K&M ended 4.55% lower at 10.5 cents, giving the group a market value of 424.82 million ringgit. The government is said to be reviewing an existing windfall tax on the palm industry and hopes to complete it next year. According to a Reuters report, Plantations and Commodities Minister Datuk Sri Fadila Yusof said this when responding to a parliamentary question on taxes burdening the industry, but did not provide details of the review. The matter would be discussed with the Ministry of Finance. The report noted that planters in Malaysia have for years asked the government to reassess the tax rates and the threshold for the windfall profit tax. The government currently imposes a windfall levy of 3% on palm oil prices above 3,000 ringgit per tonne in Peninsular Malaysia and above 3,500 ringgit per tonne in Sabah and Sarawak. In April, Deputy Finance Minister Wan Datuk Sri Ahmad Maslan said Putrajaya would improve the levy collection mechanism and was prepared to review the windfall profit threshold by taking into consideration the production cost of palm oil. Putrajaya says there is no pressing need to utilize its rice stockpile amid the current shortage in the local rice supply. Agriculture and Food Security Minister Datuk Sri Muhammad Sabu said Malaysia has a rice stockpile of 900,000 tonnes, the government's 250,000 tonnes and commercial stock of 650,000 tonnes, which can sustain the country for 4 to 5 months. He added that the government intervened to address the issue and will also be introducing Rahmah sales for rice. The minister said panic buying triggered by a sudden hike in the price of imported rice was to blame for the supply crunch, and that the ministry took note of a suggestion to open 30% of Bernasa's rice monopoly to other industry players next year. The country's sole rice importer had raised the price of imported rice to 3,200 ringgit per tonne from 2,350 ringgit per tonne, citing factors such as a weakening currency exchange rate and the impact of India's white rice export ban.